All right. Hey there, everybody. Good afternoon, good morning, good evening, depending on where you guys are at. I hope y'all are having a good trading day so far. Hey, Mirza, Lorna, great to see y'all. Hope you guys are doing well. Hey, 007, good to see you too. Carol, you as well. Jay, good morning, guys. The dude, awesome to see you. So let's go ahead and get started. We'll, of course, start with SPX here. But then, really, it's a great time for the next hour. I would be more than happy to answer any questions that you guys have around trading, whether it's on a specific chart, maybe a trade that you're in, a strategy, and we can go and dive into that in more detail here. So, starting with SPX, excuse me, um, we had CPI out this morning, right? For those of you who joined me on the Monday market update, absolutely, we can take a look at that. Let me write it down so I don't forget. As well as Mac, we can take a look at DT too. But we talked about this some on the Monday morning market update. For those of you who joined me on Monday, where we knew we had CPI this week because of the Fed's narrative. There is that possibility that we might get a bit more of a volatile move around it. But I was a little hesitant to necessarily do any sort of trade specifically off that potential volatility. And the main reason why is because CPI really hasn't been much of a market mover this year, right? It's almost been a bit more of a non event compared to the volatility that report caused last year. And so I kind of wanted to see how the market reacted to CPI, see how it proved itself before necessarily, considering to jump in and trade it off of a volatile move again. And we did end up getting a gap to the upside. But I don't know. I personally wouldn't necessarily call this a strong volatile move, depending on a trade that you maybe put on. You might have been able to take a quick win this morning, especially if the price gapped up into your strikes and into the levels that you're looking for, around 4,500. But otherwise, this to me still isn't necessarily a strong move compared to what we saw last year. And certainly when we look at the daily range for today, at least as of right now, it's still a bit lacking, right? So it did cause a little bit of a bounce and a euphoric move when it came in. I believe it came in less than anticipated. But I would argue it's still not the volatile move that we saw last year off CPI. For example, this here, if I remember correctly, I'm pretty sure, was a CPI day, this bar here. And that bar almost had a 200-point range. We gapped strongly to the downside, and then it immediately started to reverse back up and closed above the high of the prior day, and gave us close to that 200-point daily range overall. So when you compare it to something like that, yes, we did have a little bit of a gap move, but we're certainly not seeing that volatility continue the course. And so for myself, I'm more than happy to have sat on the sidelines for that gap move and have protected capital, because I know I would have been much more upset and emotional if I had tried to play something and either one, the gap move didn't reach the strike levels I was looking for, or two, right, it potentially, if it didn't get a gap move today, I know I would have been a lot more upset about that. So given where the price is at right now, right, technically the bullish trend remains valid. We did a good job of holding the 10-period simple as support. We bounced up. Basically, what's causing the issue here right now for us to really continue higher is the 4,500 level. That's going to be a big psychological level. It has a lot of round zeros to it. And so that's where we can kind of see that price start to stall overall when we get into trading. What I do like about this, though, in regards to the trend, is we did a good job of holding support, like I mentioned. We see the Bollinger Bands are attempting to open up here. We'll see if that stays the course into tomorrow. If it does, that gives us a little bit more of that bullish sentiment, with the probability that will eventually break above 4,500 and continue things to the upside. But on the flip side of that, momentum Still kind of resetting, right? We don't have a green bar for today. We still have more consolidating signal on the compound breakout tool, and we can see some energy still being built here into a squeeze. So if we continue to sell off into the close today and make a bearish divergent bar, I personally don't know if I'd want to take a counter trend trade signal, but it does give us a clue that we might get a pullback, right? That we may follow through with a lower low compared to today and could find ourselves right back towards the 10 period simple, basically kind of trading within a 100-point range where 4,400 continues to act as a good support level, but 4,500 acts as resistance. If we do find ourselves consolidating within this 100-point range, that allows momentum to continue to reset. It allows the squeeze more than likely to continue to build into that energy. And then we might, from there, right, with the energy built into the squeeze, be able to get a stronger trend move going, whether that's a continuation to the upside, which is how I'd look at it at this point, or potentially a break for a stronger reversal. Keep in mind, SPX is no stranger to chop this year, as we've seen in the past. Just recently, right back in April, going through May into early June, we were basically stuck in a consolidated range. Notice how the momentum there had reset. Notice the consolidating signal in the compound breakout tool. Notice the squeeze building energy. And then once that squeeze started to fire, once we started to get a little bit more agreement across the board on our indicators, like momentum building up, the bullish signal in the compound breakout tool, we can see that our moving averages, the 10 rolled off the 30, went back into a stacked up formation, and we got that nice run to the upside. From an intraday chart perspective, we can see that we're getting a bit of a pullback here. So there was that gap to the upside. We made a third deviation Bollinger Band snap. Usually, when that happens on a chart, there's a good probability that the price will either stay within this trading range for the next few bars, or it will actually continue to the upside. So you can see we continued a little bit higher to the upside on the next bar, but overall, we're currently still kind of trading within this range. And what that did is it allowed the Bollinger Bands to catch up with the price, as well as give the moving averages a chance to try and catch up as well. Now, they're still a little bit behind, right? They have a bit more room that they can move higher. Um, but the Bollinger Bands have certainly caught up with the price now to where the underlying price is getting back inside the second deviation Bollinger Band. That means it's getting back inside that comfort zone. And now the price will usually trade according to how it likes to do. It may stall and start to consolidate, allow the 10 to catch up. And if it tests the 10 and holds it as support, that would be a re entry for another bounce up. Or we could get a stronger pullback where the price comes down to meet the 10. And that's certainly a possibility, especially when we look at the smaller time frames. You can see momentum's in the process of resetting right now. Consolidation on the 10-minute chart. You see the 5-minute chart starting to break lower. So it certainly seems like you're getting some profit taking here and a pullback in the price overall. Another clue that we could have gotten this pullback, if you were a little bit more aggressive and wanting to trade it, was the fact that the last hourly bar did print a bearish divergent bar. And that's kind of what we were talking about on the daily chart, where if the bearish divergent bar prints on the daily chart, it could be a clue that we get a follow through with a lower low tomorrow, or at least within the next 3 trading days, right? And could cause a stronger pullback. Now, the daily chart, we need to wait for that bearish divergent bar to confirm into the close today, right? We need to confirm that's actually going to print as a valid signal. But on the hourly chart, that certainly printed. If you took a trade entry there, you're down about 15 points right now on that put or on that bearish trade idea. Should, depending on your strikes and the strategy, should be able to lock in profits off of that pullback move right now. The reason why I would consider maybe locking in profits is because on the 10-minute chart, we are running right into the ATR trailing stop as support. So if that support does end up holding, we could pause here and start to consolidate. That would allow momentum to continue to reset. If it ends up breaking, though, then 40 has been a recent price level, but I'd really be looking closer to 44.50 for that continuation lower. That's, of course, a nice psychological level for the market. And if it breaks 44.50, then I'd be looking not only for the gap to potentially fill back down to 44.40, but then a test of where the 10 period simple currently is at on the hourly chart to see if that can hold support. And that certainly would be a stronger pullback move to then, if it does hold, makes for a better buying opportunity to jump back into a trade versus if you tried to buy here closer to the open. But right now, the ATR trailing stop is attempting to hold. So we'll keep an eye on that as we go through other charts and I answer questions and see if an intraday setup starts to occur for us. But let me catch up on the chat here. So Carol's asking, how do you place an unbalanced butterfly on Tasty? I know the spreads need to be entered separately. I can't do it. You don't have to open the spreads separately, Carol, for an unbalanced butterfly. I'm assuming, and please correct me if I'm wrong, but typically when I think of unbalanced butterflies, I'm doing so where there's an additional contract on the credit spread. Is that how you're looking at it? An overall net credit, or are you looking at it as the debit? Okay, so the credit spread side. So the way that you do an unbalanced butterfly on Tasty when setting it up is what, at least what I do, is I start with the butterfly part of the trade, right? A standard butterfly. So for example, the high of today, let's double check that. The high of today is just shy of 44.90. So let's go off the idea that we really don't anticipate it breaking back above that level into the close. And so that's where we kind of want our short strike to be on this unbalanced butterfly. So the first thing I do is I look at opening the standard butterfly, right? It's a 1-to-1 contract amount. But as we just mentioned, on an unbalanced butterfly, you typically have an additional contract on either the debit spread or credit spread side of the butterfly. And in this case, we're looking for that additional contract on the credit spread side of the butterfly. So to do that, that basically means that we want to add one more additional contract to our short strike and one more additional contract to our long strike that's further out of the money. This creates a contract ratio of 1-3-2. One of these short strikes is paired with the 44.85 call, and the remaining two short strikes are paired with the long 44.95 call. So it's not like there's a short strike out there that's naked, that's not covered on one side or the other, right? They're both covered together. And as you can see here, personally, I'm not necessarily a fan of this premium, but it's about a 20-30 cent credit for the trade idea. So with unbalanced butterflies, the idea is if it remains completely out of the money, the credit that you receive to open the trade, that's your locked in profit. But if it bounces back up the underlying price and we find ourselves going back into 44.90 into the close, you basically have insurance in this trade in related to the butterfly. And so because of that, if we were to bounce back up to 44.90 but not break above it, that's where you get that max profit potential of around let's just call it 525. So we get a 25-cent credit here on the fill. 525 is the max profit potential. The reason why it's 525 is because your debit spread side of the trade would basically be in the money and have a $5 value to it, where the credit spread side of the trade would still remain out of the money. And that means the premium that you would receive here would still be an overall profit to you. So that's where you get the 525 from. The real risk around an unbalanced butterfly trade like this is if we break strongly above 44.90. So let's say we hold this 10-minute support, we bounce up, and we actually close the day at 4,500. Well, if that happens, that means this entire strategy is in the money, and it means that it's above our short strike, which is what you don't want to see on an unbalanced butterfly where the extra contract is on the credit spread side of the trade. And in turn, it means you have a risk of 475 because you're losing money with that credit spread going completely in the money. And it's a 5-point with spread. But of course, you received at least a 25-cent credit on it. So 5 minus 25 cents is how you get that max loss of 475. So when you consider the max profit potential versus the max risk, right, it's not a bad risk versus reward scenario necessarily. And the forgiveness factor around this trade compared to a regular butterfly is if it stays completely out of the money, you can still get a small profit based off of the credit and the premium that you received when you opened it up. So, Carol, you can't open this all in one order ticket. You just have to make sure your contract amount matches up correctly. So, I hope that helps you out there. And 007, yeah, happy to talk about that. So, on tonight's webinar, for those of you who don't know, both myself, Cody, and John Carter are doing a webinar, a free webinar, talking about small accounts and how we have grown that and kind of the risk factor around small accounts, some of the hiccups that all of us have run into in the past, right? The kind of the hurdles that we've had to break past, and how we've overcome those hurdles in order to grow small accounts successfully. So for those of you who are interested in signing up for that free webinar and having us kind of go over the ways that we've been able to successfully grow smaller accounts, um, please feel free to sign up for that. I'll send out a link in the alert section here, as well as in the chat section over here on Twitch and YouTube. Like I said, it's a free webinar, so feel free to join us. It's at 7 p.m. Central tonight that we'll be doing that live. And we will be, I'm not on camera right now for Twitch or YouTube, but we will be live and on camera tonight for the webinar. So it should be a lot of fun, and a fun discussion to have. So certainly check it out, guys. Uh, Let me go back and answer some of these other questions too. I know Mike was asking about PA and W, so let's pop over to there and see if we can't help him out in finding where support is at. Wow, PA and W down quite a bit for the market being overall bullish today. A little surprising there. Did it get some bad news, Mike? Is that the reason it's down? Jimbo, what do I consider a small account? That's a good question. That is certainly a bit of, per person. Some people might consider a small account, 50,000. Like John probably might consider that a smaller account, right? But personally, I consider smaller accounts usually around 5 to 10,000. However, I also trade accounts as small as $500, right? I do a thing called the $500 challenge, where typically at the start of the month, I'll risk $500 of capital. I'll break apart that capital risk across multiple trade ideas. And it's one to help teach people about capital risk, showing them that you don't need a Warren Buffett size account in order to trade and grow an account successfully. And that you can do so on a very small amount of $500. So I know that's a relative question, and that will change depending on what trader you ask. But to me, I would say a small account is anywhere from $500 up to maybe like 10,000 is what people might consider a small account. And then how do I manage the day trade a broken wing butterfly SPX? Let me know, Alex, if there's a specific broken wing butterfly that you're in that you're managing, and I'd be happy to walk through it. There's a few different ways that you can try and manage it without necessarily triggering the pattern day trading rule, if that's what you're asking about. So just give me a little bit more context in that question, and I'd be happy to go through it and answer it for you. But let's back to PA and W. So PA and W here. I mean, wow, what a drop. I don't know if this was off news necessarily. I haven't been looking at PA and W recently myself, but a pretty strong pullback to see. Now, the good news for those of you who might be bullish, and we'll see if it stays the same into tomorrow, but there are a few good things to note here. The first thing is, even though this is a pretty strong move to the downside, notice the Bollinger Bands. The Bollinger Bands are still actually coming up to meet the price. So even though the underlying price is putting direct pressure on the Bollinger Bands, the Bollinger Bands aren't budging. And that's usually a good sign. Now, the hesitation I kind of have around that at this point is the bar today is making a bearish divergent bar. So with a bearish divergent bar, of course, that gives us the possibility of a lower low within the next few bars. And if we were to kind of stair step down with a lower low, that could force the Bollinger Bands to flare open and change that narrative. But right now, the Bollinger Bands are doing a really good job of holding this level. And in turn, it's causing the price to stall here. And this actually happened recently on Microsoft. This was something that we talked about in the small account mentorship where let me pull it up here because we were actually in a Microsoft trade earlier today. Very happy we took it off the table this morning, certainly near the highs. But we were trying to trade Microsoft bullish to the upside. At the time of our entry, it had made a nice true low. It had a squeeze. Momentum was starting to build up again, right? We were doing a good job of holding the 30 period simple. And so we were just looking for that continuation, potentially higher, like a run into earnings, maybe a retest of these levels. That's at least what I was looking for, was just a little bit of a bounce back up to take a quick win. Instead, though, right, it had some news that came out that kind of dropped the price. However, on that drop, notice what happened with the Bollinger Bands. The Bollinger Bands actually held this level, right? They came up to meet the price. They didn't budge when the underlying price was putting pressures on the lower Bollinger Bands at the low of the bar during that day. And then you can see the next trading day, what happened? Well, the Bollinger Bands still weren't budging when the underlying price was putting pressure on it. And so when that happens and you see that, that's typically a good sign that the Bollinger Bands are not anticipating a break of that level. And in turn, you could get a reversal back to the upside. And one of the benefits, of course, that we had on Microsoft was we had bullish divergent bars. And just like what we talked about with a bearish divergent bar, where when it prints, you're looking for that potential lower low within the next few bars. A bullish divergent bar, when that one prints, is looking for that probability of a higher high within the next few bars. I usually give it 3 bars to work out. So you can see here we had 2 bullish divergent bars that were valid, and then we got the follow through today on that higher high, and that allowed us to close out of this trade, which was very nice to see. So on PANW, let's go back to that now to answer this question. The thing that I would be watching personally is, one, can PANW bounce back up into the close, ideally getting rid of the bearish divergent bar sentiment, and the really ideally maybe even giving us a bullish divergent bar if it got enough of a bounce up. Now currently with this trading at the lows, that doesn't look likely, unfortunately. But it is doing a good job, like I said, of holding up at the Bollinger Bands here. However, right, if this is how it looks into the close of the day, I probably wouldn't necessarily take any drastic, I wouldn't necessarily buy in here and say, oh, this is a great opportunity to buy in, because one, we are breaking currently the 30 and ATR trailing stop. If at the close of the day we bounce and hold that level, that's a much better clue that it's trying to maintain this range of support, and that we could, start to be in chop between roughly 237 up into the 250 range, and we're just stuck in consolidation. Back-to-back divergent bars is a sign of consolidation. Momentum resetting can be a sign of consolidation. But we do have some pullback signals that are still valid. And with the bearish divergent bar, if that does end up printing, giving us the possibility of a lower low, that's what I would say you want to be cautious about, that if this does end up stair stepping down, well, even though the Bollinger Bands put up a good battle today, if you will, more than likely, if this continues to trade lower, it will force the Bollinger Bands to open to the downside, which is what you don't want to see. So what I would be looking at into the close here is, ideally we get a bounce up and it still continues to hold the ATR trailing stop as support, which right now it's attempting to change into resistance, and it holds the 30 as support. If that happens, that would give me a little bit more confidence that it's trying to maintain the overall bullish sentiment. and that it's just going into consolidation. And this was just, a rather large red day for PANW. If instead, though, it closes below these levels, even with the Bollinger Bands being flat, I still would at least give it another day to make sure that it holds that level, kind of like what we did with Microsoft, right? Where if tomorrow the Bollinger Bands continue to remain flat and we start to bounce back up, then that kind of confirms the consolidation narrative. But if instead we drop lower and the Bollinger Bands start to flare open, then you have to be cautious of this continuing to sell off. And from a daily perspective, the next big support level is all the way down here at 204. That's the 100 period simple. Now let's take a look at some of our other time frames like the weekly and the 4-hour chart. Maybe there's a level coming up that's a bit closer than that basically 200 price level down there. And there is. So the good news is you do have the 10 period simple as support on the weekly chart at 226. So that could be where it starts to stall and hold support. However, for those of you looking bullish, I see Christian was looking to try and go long on PNW. Be very cautious. And the reason why is notice where momentum is at. Momentum has been adjusting the axis higher now for quite some time. This used to be the top of the axis. The top of the axis, whenever it reaches that level, is usually a sign of exhaustion. But recently, this has been such a strong move to the upside on PANW. We've continued to adjust this axis higher. And technically, everything about this is bullish. But we know when it trades at levels like these, at some point, will eventually hit exhaustion again. And so, what you need to be mindful of is if into the end of this week, for example, it starts to break below the 10, or within the next week or two, you start to see a few red bars pop up, that could be a sign that this bullish trend is finally taking a pause and either getting a pullback to allow weekly momentum to reset, or it will consolidate to allow weekly momentum to reset. So that's what I'd be a little bit mindful of at this point. Certainly, though, if it holds the 10 period simple here as support, if everything remains bullish, it looks like it's bouncing back up, then that might actually be a good place to buy back in. And at the very least, play for a bounce back up towards these levels up here, um, back into 260. I don't know if I'd want to necessarily play much higher than that unless the Bollinger Bands are still really flaring open and we, keep that bullish sentiment back on the daily chart. Otherwise, I still think this could start to be a sign of consolidation just because on the daily time frame. Oh, okay. Christian, you're looking for a long-term time frame. Well, we can take a look at that in a second. But really quickly, the only reason why I'd be a little bit mindful of it shorter term is because on the daily chart, we did reach exhaustion, right? We went to the top of the axis very much like we did here, and it's been in the process of pulling back, and it still has room to go all the way back to the zero line, which means that it could still have a bit more room to drop, or at the very least consolidate. And so if this starts to pull back and kind of get that stronger reset, it could be a catalyst for the weekly chart to also try and reset momentum. Now, from a bigger picture point of view, let's go to the monthly chart. So on the monthly chart, we actually have a squeeze that's still valid. It looks like it's starting to be in the process of firing. You have a bullish signal on the compound breakout tool. Momentum is bullish. Room to move up to prior exhaustion levels, which is a good sign. And another good sign is PNW is still relatively new in regards to a monthly chart, meaning it's still trying to gather enough data in order to, give us a full view of what the awesome oscillator looks like, right? And things like that. And so when it's a bit newer like this, it's much easier to get up to the top of the axis and then start to adjust it higher, kind of like what we did on the daily chart, because in a way, it's almost like an infant from a monthly perspective, right? It's still trying to figure out its personality type. Still trying to figure out what, is exhaustion levels at the bottom and top of the axis and work accordingly from there. Now, on the top part of the chart, the monthly bar is attempting a bearish divergent bar. There is room to pull back down towards 200. 191 is currently the 10 period simplest support. So if we do start to break on the daily time frame and pull back, I think around 200 might be a good place to buy in for longer term leaps if that level holds. That's the daily 100 period simple, basically. It's monthly support. And so if that level can hold, it's a big psychological level. If that level can hold, and this is a company that you really like, that seems to be a pretty valid spot, in my opinion, to maybe start considering buying in shares or buying in a leap longer term. On the weekly chart, it's right at the ATR trailing stop. So it's multiple support levels across multiple time frames. And actually, when you look back, 200 used to be a price resistance level, which makes sense. It was a psychological level. So if it does get a pullback all the way into that range, it's basically testing what used to be price resistance and now seeing if it can hold as price support. And if it can, that to me would be a much more ideal situation to buy in. Now, it may not pull back all the way. It could hold this weekly support here and just chop, which if that's the case, then this might be a good level to buy in at. But that's kind of, if you're a bit patient, Christian, that's what I'd be watching for is, does it hold this level or does it continue to break? And if it continues to break, then watch for the 200 level. And if that holds, that seems like a good buying opportunity longer term for PANW, I'd argue. So I hope that helps both you and who was it, Mike out on where PANW may or may not be going overall. So hope that helps y'all both out overall in this situation there. Um, let's keep going. I know DT was up next. I do see Alex, you mentioned that SPX trade, so we'll jump into that after DT, and I'd be happy to address that too. Oh, and Mary, that's good to know. Mary mentions the IBD headline Microsoft's fast expanding cybersecurity offerings is putting pressure on other companies like Zscaler and Palo Alto. I might have to ask my brother about that. My brother actually, he works for Deloitte as I think he's technically a consultant, but all the stuff that he does is within the cybersecurity kind of realm, if you will. So I'd be curious to hear his thoughts on what that is. Maybe a good question for him. Oh, and Carol, I did not see AA, so let me write that down. We will certainly try and take a look at that. And then Phil's asking, "Hi, Allison. I've been following your trading for years and want to sign up with a membership that I can get the most live trading from you. What membership would that be?" Um, yes, I am a part of several memberships. So I'm here in the free room. I'm a part of the options room. But the place I spend the majority of my time is the small account mentorship. So that would be probably the best place to go. But I will say, before you sign up, consider watching the free webinar tonight, because we will be talking about a deal within that free webinar that includes the small account mentorship. So that might be something that you're interested in doing, um, along with JC and Cody and myself. So, and if so I and Mel, same thing. I can to be completely honest, y'all, I was up the majority of last night with my daughter. She was having like bad nightmares or something. I don't know what the deal was, but I'm kind of brain dead slightly from that. So I don't know what the promotional rate is off the top of my head, but I would certainly, for anyone interested in joining the small account mentorship, please check out the free webinar tonight, because we will be going over some deals around the small account mentorship that could certainly help you out a bit more. And yes, 007, they did combine the profit recycling mastery and the small account mentorship kind of to be more of a service to you guys on the other side of the screen. Obviously, profit recycling is a great way to grow small accounts. And it just seemed, like a better deal for everybody because not only do you get myself in there, but you get Cody. And at least for the time being, you get a little bit of John Carter jumping into the room every now and then. So we did that about 2 months ago, and it's been really going well overall. It's been a lot of fun. But I still, of course, do all my profit recycling strategies within the small account mentorship. So that, that side of the narrative has has not changed whatsoever. That is my bread and butter of a strategy that I certainly like to trade. And of course, Alex, not a problem. So let's keep going here. On DT, I want to make sure I get to all of y'all's questions today before our time's up. So DT here, we have a nice squeeze. We had a recent true low. It was a one-off true low, but we did have a recent true low here with the Bollinger Bands flat. So that might have made a good entry for a longer term swing trade. Certainly, if you jumped in there, it's looking pretty good right now to the upside for a long call or for a share or something like that. You have the bullish signal and the compound breakout tool. That's still valid. You have all three lines in agreement, so it looks great. Momentum had a reset, never crossed below the zero line, and is now attempting to build up off of it. So this is starting to turn into more a bullish trend signal. So that looks good. On the top chart here, right, during that pullback in momentum, here's a great example of where the underlying price doesn't necessarily need to pull back when momentum pulls back. The only thing at most it needs to do is consolidate. Sometimes it will pull back with momentum, right? The underlying price will drop with it when it's at bullish exhaustion. But in this case, all it did was consolidate, it just stalled. And then from there, of course, as we start to see the bullish signals and the true low signal come in, we can see that from this consolidation, we're attempting to break to the upside. Also, notice the third deviation Bollinger Band snap. We talked about this just a second ago at the start of the session on the hourly chart here for SPX. When the underlying price breaks the third deviation Bollinger Band, which is this outside blue line, there is a very good probability that the underlying price will either stay within this bar's range for the next few trade days, or it will actually continue higher. And it has a better probability of continuing higher when one, there's room on momentum to do so, and two, especially when you pair it with a squeeze that is still valid or is starting to fire, then there's a good chance that it could actually keep going with the move. So you can see today we followed through with a higher high. It is currently pulling back, but it did make another third deviation Bollinger Band snap. Now the bearish divergent bar could cause us to see a slight lower low, might mean that we're kind of stuck in this range here the next day or two. But overall, if you're in a bullish trade on DT and you have time, first of all, never hesitate to lock in profits, I would say. But if you have the ability to leave a runner on, this is one of those times where I don't think that's a bad case to do so. Because, like I mentioned, you still have room on momentum. You still have the squeeze, which looks like it's just starting to fire. The third deviation Bollinger Band snap almost causes that case of FOMO in traders where the price can actually keep going in that direction even after a strong move like we saw here. And everything else about the signals are valid. The 10's rolling off the 30 for a bullish trend. The ATR trailing stop is printing support. The Bollinger Bands are still opening higher, trying to catch up with the price. So, I mean, all of this looks good from a bullish narrative. If you're like me and you're not in DT, right, and you're late to the game, then be very cautious about entering here. It's not to say it can't continue higher, but one, the bearish divergent bar does, of course, give that possibility of a lower low. So if that happens, you could be able to jump in at a better price. And two, the move has already started to happen, right? It's already in the process of going. The day to really enter this trade, I would argue, would have been back here off the bullish divergent bars off support, or even, on the 10th, basically. You had an excellent follow through of a higher high there. And, you started to actually break the price resistance level that you're running into around 53 to really keep going. So if you have a case of FOMO, right, on this, what I would say to do is it well, personally, I would probably, if it prints a bearish divergent bar today, I would no matter wait at least one day, see if it gets a little bit of a pullback. If it does, but holds support and everything else still looks valid, then I would take that as my entry to the upside. But if you really felt the need to jump in today, because technically this bearish divergent bar is a counter trend signal, so it may not get the follow through on a lower low, then I would only do so for a portion of my normal capital risk. So let's say my normal capital risk per trade is about $500, then I might be only jumping into this trade with $100 of capital risk. That way, if it keeps going, great. You have a little bit of skin in the game and you can play to the upside too. But if it pulls back into support and holds, then you can build into your normal risk tolerance at a much better technical level, right? At a much better entry level on the chart to play to the upside, and still take advantage of that move and be within the risk tolerance that you like to be in for your normal trade entries. The third option, of course, is we pull back and then it breaks, right? The technicals start to cancel out and it just gets a reversal. Well, then at that point, you're managing a much smaller amount of risk, right? You're not jumping into the full $500 of risk up here. You only have $100 of risk that you're managing for the account, and it's, a little less of an emotional standpoint on yourself. It keeps you hopefully from falling into that dark side of trading a little bit easier, and it doesn't burn your account as much as if you were to build into your max risk tolerance up here at what I would argue isn't necessarily the best place to do that. So it still looks good if you have a runner on, and especially if that runner has time on the trade, right? It's not this week's expiration, it's further out in time, then it still looks pretty decent to me. I'm actually going to write this one down for my short list. Like I said, it's not something I'd want to jump into today, but if it does get a pullback and everything still looks good, if the squeeze is still valid, I wouldn't mind trying to participate a little bit in that too. Certainly. Yeah, Christian, a solid power nap. That's not going to happen today, unfortunately. I, I wish I got speech today. I got a few meetings later. We have the small account mentorship room session into the close, so probably won't get a nap, but I will find find a way to have some energy. And certainly after the webinar tonight, I do plan to sleep. So that's DT. Now let me scroll back up because I know Alex mentioned his question around SPX broken wing butterfly for today. And then I did not forget, Carol, we'll still look at AA before I jump off the mic here, certainly. But let me just gather these strikes. So you bought the SPXW 4485 call at 230. Then you sold 3 of the 4490 call at $1.38 and bought to open 2 of the 4495 call at 82 cents. Okay, so this is actually not a broken wing butterfly. This is an unbalanced butterfly. And this is kind of what we were talking about earlier with Carol. So let's go ahead and take a look at what this looks like on the option chain, as well as go through the math. So you have actually all these strikes. So this was the scenario that we were kind of looking at here in regards to the trade idea. Now let's go through the math on it to see what your total net is for everything. You have a 230 risk on the 4485 call that you bought to open on top of an 82-cent risk for 2 contracts, right, on the 4495 call. So we're basing this all on one contract at this point. So that's the max risk that you have out there. But of course, you sold 3 short strikes against it at $1.38 each. So minus 138, minus 138, minus 138 means you have a net credit of 20 cents. So it's very similar to the chart that we see here. And so this is your trade. Right now, with the way this is set up as an unbalanced butterfly, you're in a good spot. As long as this remains out of the money, the 20-cent credit that you have on the trade will expire worthless and be a locked in profit. The risk that you have is if this starts to bounce to the upside. So if you don't want to necessarily day trade this, one way you could look about protecting capital, because right now you do have a max risk out there of 480. So one way that you could look to protect capital is actually open an additional contract on the debit spread. By opening an additional contract on the debit spread, it means you're opening one more strike on the 4485. Oh, not what I meant to do. You're opening one more contract on the 4485. So you hold two bought to open strikes there. And then you're also buying one more on the 4490. And what that does is it basically turns it from an unbalanced butterfly into a standard butterfly. But let's see what the cost of that debit spread is. The 4485, 4490 debit spread is about a 50-cent cost basis. So if you take this action, it's going to cost you about 50 cents currently, right? When you pair that with the 20-cent credit that you hold on the unbalanced butterfly right now, it basically means that you hold a 30-cent debit on a standard butterfly that is two contracts. So the good news is it at least takes your risk from $4.80 and reverses it down to 30 cents. So it takes off a whole chunk of your risk. The bad news is you still have 30 cents of capital out there. So if you want to try and do this to where the trade is a break even value or profitable, what you want to look to do then is open the debit spread, the 4485, 4490 debit spread, to basically turn that unbalanced butterfly back into a standard butterfly, but you want to open it ideally for 20 cents or less. If you open it for 20 cents and you have a credit of 20 cents, then it basically means that you have a zero cost basis on the entire trade, which means you don't hold any risk. You didn't lock in any profit, but you don't hold any risk. And then it's just a bonus trade into the close if we bounce back up into 4490 and trade anywhere between 4485, 4495. It will settle for some sort of value, and that would be your profit there. If you open it for anything less than 20 cents, then that difference, right? Let's say you open this debit spread for 10 cents, then a 20-cent credit minus, or, when combined with a 10-cent debit would be a locked in profit of 10 cents. You would have no risk on the trade at that point. The worst case scenario is you walk away with a 10-cent profit. And then if it once again bounces up and closes anywhere between your two long strikes of 44.85, 44.95, that's your bonus profit. Let me know if I lost you at all on that, Alex, but that is currently the trade that you have and what you would need to do. You need to learn how to do math. Unbalanced butterflies can be a little tricky, so I don't blame you whatsoever. But if you're really concerned about that risk being out there right now, if you're concerned that this is going to bounce back up into the close right now, it's, in your favor. But I totally get it, especially if you have to step away from the computer a little bit later. Then you might want to consider, like I said, adding on that debit spread, because even though, on my platform, for example, it shows that this would cost you capital to put it on. Technically, if you look at this on your trading platform under buying power effect, it should actually show you a credit, which means it's a capital positive move for the account, because you have technically 480 of risk out there currently. But by opening this debit spread side of the trade, it basically covers, because you can't lose on both sides of a butterfly, right? And so on this unbalanced butterfly you have an additional contract on the credit spread. So what you want to do is open one more contract on the debit spread to make it even. So basically, you hold two contracts of a debit spread and two contracts of a credit spread. That's what makes it the 2-4-2 scenario if you open that debit spread. But in turn, it means that you've taken away that 480 of risk on that additional contract on the credit spread, and you've made it disappear basically. And you've dropped it down to what would be roughly a 30-cent risk if you got filled at 50 cents on the debit spread. I hope that makes sense. And then if you take no action, so if you don't open the debit spread and you take no action and into the close of the day, it closes here, the 20-cent credit that you have on your unbalanced butterfly is your locked in profit. If going into the close of the day, though, this starts to bounce and it goes up to 44.90 but doesn't break it, then you actually have a max profit potential of 520. That's really not too bad, right? The risk on this trade, though, is if you get a strong bounce up into the close and it starts to break above 44.90. If that happens, especially if it goes completely in the money, then you have to be okay taking a hit of 480 on your account. And yeah, if you're familiar with the Analyze tab, certainly take a look at that. I know Laura uses it quite a bit when she's profit recycling, and it can really help you understand, what your risk is and where the sweet spot is for your trade to end up being. I don't know if I've always just done the math by hand myself, so that's how I'm kind of used to doing it. But that would be what would happen if you don't take any action and that's where it closes. So hope that encompasses what you can do to protect your capital risk without triggering the pattern day trading rule, right? Because SPX does cash settle. So just by opening the debit spread, you're not closing anything, but you have reduced your risk by quite a bit, versus if you don't take that action. So happy to help out. Yeah, Phil, I'm looking forward to it too. It should be a lot of fun. We've done like a practice run on the webinar, and it was it was a lot of fun during the practice webinar doing it. So I'm looking forward for you guys to join in too. And then yes, Carol, a gap up. I know Omar, and I apologize, Omar, if I completely butchered your name. Please let me know. But what he mentioned is basically the gap between the high of yesterday's bar and currently the low of today's bar. That gap in between the two is what caused a gap up. So it's not between the open and close, or at least that's not how I consider it. I consider it between the high of the prior bar and the low of the current bar. So if we keep selling off into the close, we might actually fill the gap, right? If we go back down basically and test the highs of yesterday, which are 44.43, then the gap gets filled. And vice versa, when it's a gap to the downside, it means that you opened, and the high of that bar of the day is below the low of the prior day's bar, where there's space in between. And then Sharon, the webinar for Eastern time tonight is at 8 p.m. because it's 7 p.m. Central. But for anyone who can't join live, don't worry. As long as you're signed up for the webinar, you will receive a recording of it. So that's, always the nice thing here at Simpler Trading is we basically record everything that we do. So that way, if you can't be there on time, or, you're like me and you're dealing with the kids or something else, you can still be able to watch the recording of the webinar. And yes, you'll still get the pricing for the webinar as well. Absolutely. That pricing will last up until the class at the very least. And then, and Nasser, no, I didn't get to BA or AA yet. So I know I'm almost up in time, but I believe nobody's after me. Mirza usually reminds me in case I'm wrong, or Lorna does. But I don't think anyone's coming up after me. So let's go over AA and we'll go over BA, and then we'll call it a day there. Okay, thanks, Mirza. I thought so, but I'm never quite sure if there's somebody, doing a special session. So good to know. So on AA for this one, overall bearish trend. Now, yesterday you did have a bullish divergent bar that followed through with a higher high within the next day. So if you took that trade for a scalp or something, well done. Was a bit more of a counter trend signal. But even though you're kind of in this bearish trend, really more recently you've been in consolidation where you're not really breaking above 37.55-ish, right? That's kind of been a price resistance level, and you're not breaking below price support around 31.50. So you're kind of basically stuck in a 6-7 point range here of consolidation. And that's not surprising that we remain in this range going closer into earnings next week. Notice how the Bollinger Bands are flat. The 10 and the 30 are basically converged. Momentum is hugging the zero line. All of that is signs of consolidation. You do have a slight bullish sentiment in the compound breakout tool. So if we do manage to break above price resistance, there could be a case that we try and get a little bit of a run up into the 100 period simple. I would not anticipate a break of that level whatsoever prior to earnings unless some news comes out before the announcement to kind of help it out. Otherwise, if we do start to break price resistance, that would basically be the next target to the upside before the earnings announcement. And then you have a squeeze building energy in to this setup, which also isn't surprising. Earnings might be the catalyst for that squeeze to fire, right? If it has really good news, then it could be what gets us back out of a bearish trend, maybe going into a bullish one again. If the earnings news disappoints, that could be the catalyst for us rolling over and continuing the bearish trend to the downside. But I wouldn't anticipate the squeeze firing prior to the announcement, and I really would not anticipate a break above the 100 or below the ATR trailing stop before the news. I think, if anything, given how these technicals look, will likely remain in chop. And if you did take this as an overnight trade to the upside, I personally would probably consider locking in the win because right now the Bollinger Bands aren't budging and you're much closer to price resistance of this consolidated range than you are price support. Nicer, isn't that the truth? So I hope that helps you out. I think Carol, you're the one who asked about AA. That's what I'm seeing for that one personally. And then let me go to Boeing. And then last but not least with Boeing, of course, Carol. And then Lord, I will be jumping off in 1 second. For Boeing here, basically, it too is looking like it's starting to go into consolidation now. Unlike AA, the trend is a little bit more on the bullish side than the bearish. We're trading above the 100, the 10 period simple starting to cross above the 30, so that helps with the bullish sentiment. But you can see the Bollinger Bands. Here's another great example of the Bollinger Bands aren't budging. They're actually coming down to meet the price, even though the price put direct pressure on the Bollinger Bands with the highs of the day. So when you see that happen and the Bollinger Bands don't budge, they don't start to flare open like they did here, it's a good sign that they're not anticipating a break of the level. You can see the price is pulling back. It's actually making a bearish divergent bar. So that could follow through with a lower low and bring us back down into the 10 and 30 as support within the next few days. You do have rising momentum. You do have, I would, you could say this is a bullish signal. I'd probably argue it went back into a consolidating signal here overall, just because the 10 really isn't strongly above the 30 period simple. So usually that when that happens and it's a bit more choppy up here, when that bullish signal cancels, it goes into a consolidating one. Um, and it looks like a similar situation where you might just chop into the earnings announcement there. Did you have, Naser, a specific question around Boeing? Let me scroll back up. So On the divergent bar, let me scroll up further because you asked if I answered your question and I missed the question. See if I can find it. Okay, so third time was the charm on Boeing. You did the 215 call for 714, paid finally, well done. Do you think it acted in compliance with the divergent bar prediction that you were um postulating in mid-June? So I can't, that's already been too long. If it was based off the weekly chart, let's go back to the weekly chart. If it was based off the daily bar, then no. Usually I give Virgin Bar 3 bars for that to follow through. Um, and so on the weekly chart, we did have a bullish divergent bar. That technically already followed through with the higher high within the next bar, so the signal satisfied itself. I think in this case, when we were trading Boeing, we are not only looking for the bullish divergent bar to follow through, but we are looking for the trend and the squeeze to start to follow through for a run up into earnings. Unfortunately, you can see price resistance here at 220 is what's been holding basically this entire year. It continued to hold, and then we dropped back down, and we basically have remained in chop, and now we're testing 220 again. And that, of course, is part of the reason why on the daily chart, those Bollinger Bands aren't budging at this point because they're really not anticipating a strong break of that 220 price level. It's been resistance the entire year. And it could be that it finally breaks, but I would imagine that if it does so, it does so off the catalyst of earnings. So the divergent bar from a weekly perspective, that one definitely followed through. If we were looking at like this bullish divergent bar, that one followed through within the 3 bar rule. This one technically followed through on the 3 bar rule. This one didn't, right? Usually I give it 3 bars to work out. That was the 3rd bar after the signal. So that one didn't follow through within the time frame that I typically look for. Um, but I hope that kind of helps answer the question. And in regards to what I would see currently, we're actually making a bearish divergent bar that off of 220. It almost make me want to put on maybe a call credit spread or a call unbalanced butterfly. Ideally for this week's expiration, maybe next week, as long as that's still before earnings, right? Yeah. So this week or next week, you could arguably look at a call credit spread or a call unbalanced butterfly around 220 with the idea that it will not break strongly above that price level into earnings, that it will basically remain in the chop. And if it does end up dropping back down into support and support holds, you could always build into something like an iron fly or an iron condor and kind of play the premium on both sides in the overall chop. But given that we're closer to resistance right now than support, I'd probably start with a call credit spread or, I would totally understand because we have technically broken that level up into 225. So arguably you could go a little bit higher, give yourself a bit more of a buffer and maybe do an unbalanced butterfly. And then once again, you still could turn this into some kind of iron condor and do a put unbalanced butterfly as long as it's the same spread width and within the same expiration and your put short strike is below your call short strike, then it's a capital positive move to the account. Not the best premium, so I'm not as big of a fan of that personally, but strategy wise, that's what would be lining up with the charts personally. Oh, thank you. That's it, Laura. Okay, I have to go. Thank you guys as always. May the trade be with you. And I look forward to talking to y'all next time. Bye, guys.